Yeah, on Reliance and Orora, a bit of a mixed bag yesterday with Reliance's result coming in ahead of expectations, while Aurora's was weaker than expected. But I'll start with Reliance. Yeah, pretty good result with EBITDA about 4% above consensus and NPAT about 12% above consensus. So that big beat at the NPAT line was mainly due to a lower tax rate. In terms of key positives, the US division was the key standout with new products such as Shark Bite Max performing really well, which offset a subdued operating environment. Management was able to take costs out of the business as well, and that was also positive for margins. On the negative side, Europe was still pretty weak with lower volumes in both the UK and continental Europe. The UK was impacted by a weaker housing market, while continental Europe, where Reliance mainly sells water filtration and drinks dispense products, that market was impacted by tougher economic conditions. On the outlook, overall, it was largely unchanged at the group level, although there was a slight tweak at the divisional level. Guidance for the US business was upgraded slightly, while guidance for the European business was downgraded slightly. And net at the group level, guidance was largely maintained. In terms of valuation, the stock was up quite strongly yesterday, up 6.5%. And following updates to earnings forecasts, I've got Reliance trading on about 15 times FY25 PE. Historically, it's traded at around 19.5 times forward PE. So 15 times is definitely not expensive. I think the interesting thing yesterday was that management on the call did say that Badger on the call did say that expectations for lower interest rates are yet to flow through to higher demand. And given the cost out initiatives and the restructuring work that Reliance is currently undertaking, it is a more streamlined and better business than it has been historically. So when demand does rebound, Reliance is in a good position to take advantage of that upturn in demand. So as a result, we've upgraded the stock to an add with a target price of $5.25. On Orora, so that result was weaker than what we expected, but it was largely in line with consensus, with better margins offsetting lower than expected revenue. This was especially the case in the US business, where business improvement initiatives did help. So, things such as focusing on higher value customers, churning out or getting rid of or not renewing contracts with lower value or loss-making customers, and getting rid of lower margin products as well. Australasia, that also had better margins on lower costs, such as raw material costs, such as aluminium, and also the lagged pass-through of some of the historical costs through to customers. Saverglass, that result was largely in line with expectations, although it was only a 1 month contribution for the half. So, pretty hard to gauge how that business is really going. But I guess, everybody does know that I'm still pretty skeptical about that acquisition, given the size of it. It was about 70% of Aurora's pre-deal market cap. And, a lot of these big deals don't turn out too well for the acquirer. The market for high-end spirits, that is getting weaker with ongoing destocking. And I think there's still a lot of execution risk with the integration as well. So I think it's going to take a while for the market to get any comfort on the Saverglass acquisition, especially following the downgrade that they issued in December. So, not off to a good start either. On the outlook, it was pretty vague as usual, with Orora maintaining guidance for higher earnings in FY24. However, I think what spooked the market yesterday, with the stock being down about 6.5%, was that guidance for Saverglass earnings to be flat in FY24 is predicated on no further destocking from customers, or destocking largely finished from customers by the end of March, so the third quarter of the financial year. But management's comments on the conference call yesterday suggested that some customers could still be destocking up until June, and potentially, potentially there could be some other customers that could be destocking for the rest of the calendar year as well. So, I think that does put some downside risk to Saverglass earnings or Saverglass guidance. If that destocking does go on for longer than expected. The other thing that I think the market didn't like was the net interest expense guidance for the second half, and that was much higher than what everyone had in their numbers. And as a result, once you kind of push those through the model, that did lead to quite material downgrades to my NPAT forecast. So, yeah, overall, I'm still quite cautious on Orora, maintain the hold rating, and have a preference for Amcor in the packaging space.